Analysts at EDC Securities expect the Nigerian Exchange All-Share Index to remain positive for much of the first quarter of this year, as full-year earnings should continue to make investors hold on to some of their positions. Solomon Ogene, the portfolio manager at EDC Securities, joins me now to discuss sentiment driving the markets here in Nigeria. Thank you so much for your time today. Let's start first with the sentiments that we're seeing play out in the market today.
Thank you for having me.
Yeah, I'd like to get your thoughts on the sentiments playing out in the market today.
Oh yeah, so it's very interesting. So to understand what's going on in the market now, it's important to draw historical trend line from what happened in 2023. So I think, like every one of us, I want to believe, the ASI posted 45.9% year-to-date 2023, which was stellar return, by historical standards. Right, and majority or the major driving factors behind the bull run that we saw in 2023 happened to include three factors. One of which includes the new administration's new policy, reforms, which included the removal of fuel subsidy and the devaluation of the naira, which saw banks post very robust robust, lines at the back of revaluation gains that were recorded from their long FX positions. We also saw oil and gas companies, also post very good returns, and we also saw investors, also pushing a lot of capital to work towards these companies. Another factor that also led to the pollution that we've seen in 2023, also happened to be very good, earnings releases by a lot of these companies. We saw banks post very decent top line growth as well as bottom line growth. Also, last year there were a lot of talks, particularly around M&A activities from the anticipated merger of Dangote Sugar, NASCON, and Dangote Rice Mills to become Dangote Foods, down to the proposed recapitalization of banks. So that saw a lot of activity, in the Nigerian equities markets, and that is what has translated into what we saw at the end of 2023. So going into 2024, we have the opinion that we expect Q1 2024 to be largely bullish, and so this is at the back of the fact that we expect earnings, full year 2023 earnings to trickle in, and we expect to see very strong numbers, particularly across the banking index, as well as oil and gas companies as well. However, like they say, all good things must come to an end, right? So, in the midst of the uptrend that we expect in Q1, we also expect that to be punctuated by profit taking. Because I dare say that there's hardly any investor who is invested in the market who hasn't made money, in 2023. So, so going into the rest of the year, from ending of Q1, we expect to see a very massive correction. The market, the ASI currently is above the 70,000 points mark, currently inching to about 75,000, which is an indicator that the market is ripe for correction. So, but however, in Q1 we expect that bullish run to continue, as we expect banks, corporate releases to filter into the market, and we expect that to translate into increased investors' sentiment.
Yes, because we're seeing all that sentiment play out from investors to key sectors, the banking sector, so the oil and gas sector as well, do over 100% last year as well, year to date. But first, do you think that we could see that play out as well in the oil and gas space?
Yes, so the oil and gas story was particularly very interesting. When the new administration came on board in May, we saw one of the first things that they informed, that they came up to tell us, was the fact that subsidy was going to go, right? And looking at that, it meant therefore that that marked the beginning of the deregulation of the petroleum, the petrol space or petrol market, as it were, Mind you, the diesel market has been deregulated quite a while ago. So this meant that companies can now come in, deploy capital, and essentially mine the potential, in the market. And what we saw, was we saw that trickle into top line growth or some of these downstream companies, especially. We saw a lot of investors move into names like Total that has a very wide, downstream presence. We also saw a lot of investors, interest in stocks like MRS, and also Seplat, which is worthy of note. And of course, looking at the weight, we also saw that aside that we recognize that foreign investors actually took advantage of their dual listed nature, to repatriate a lot of their foreign capital on the London Stock Exchange. Right. So, in terms of the oil and gas story, we saw pretty much, every company in that sector post very significant gains. And, like we said in our expectation, we expect that to at least continue for Q1, before, the broader market correction kicks in.
Yeah, 2023 was definitely an interesting year when you look at the market broadly. In fact, one other area I'd like to bring up as well is the area of small caps. Quite interesting how we saw quite a number of small cap stocks do very interesting numbers last year. And I'm trying to understand the fundamentals supporting that and if we think that could happen again this year.
Yes, very interesting. I think that was one of the things that, challenged a lot of ideologies, particularly around value and fundamental investing. Right? So we saw quite a number of small caps post very, very good returns. Right. So, however, looking at it from a fundamental point of view, we do not think anything has fundamentally improved. We just saw this as broader, market sentiment, right? So, essentially, this is people just trying to be speculative and put money, with the expectation that the broader market rally, would lead to spillover to some of these names, right? So we've seen names that historically, have very thin, volume, trading on the exchange, but last year we saw a lot of movement to some of these, stocks. So for the banking index, I think for some of those names it's quite understandable because looking at what the CBN governor said at its bankers meeting sometime late last year, talking about the possible recapitalization of banks. So that means that a lot of the tier 2 and I dare say tier 3 names happens to be potential M&A targets. Right? So we saw a lot of capital towards some of these some of these tickers, with the hope.
Very interesting times, you would say. Very, very interesting times, you would say. We'll definitely be keeping an eye out to see how it pans out in the first quarter of this year. But thank you so much for your analysis on the show today. I've been speaking to Solomon Ogene. He's the portfolio manager at EDC Securities.